Hi there, welcome to Kneppy Invest. Time to give a bit of an update to a tiny company on the ASX, Spectur. I am a shareholder of this company, and the main reason I took a position in Spectur a few years ago was because of the valuation. This market cap of this company is less than 10 million. In fact, it's more like 5 million, yet the company, in my opinion, is on the brink of becoming profitable and operating cash flow and free cash flow positive. However, I've been thinking it's been on the brink for about 3 years now. So the question whether they become continually operating cash flow and profitable on a quarter by quarter basis remains to be seen. But because of the valuation and because of the potential of a significant growth in the valuation of this company, if they can get to that profitable stage, which would be their inflection point, that's why I took a position. Probably I could have been a little bit more patient and just waited, because it's been about 3 years since I took a stake in Spectur, a very small stake. Now, what Spectur does is not all that exciting, and that's one of the reasons why the market is not excited about Spectur. So this company offers solar security, time lapses, thermal security camera systems. They also have a camera emergency warning systems, including shark warning system in West Australia. So just think of a building site maybe in the middle of nowhere. They might have a Spectur camera which looks for or tries to deter theft. So this camera also has a warning system. So if they see someone trying to get into this building site, they can set an alarm off, something like that. So there is a need and want for that sort of security system, and that's what Spectur does provide. They also rent some of the equipment as well. So there are a few ways they do generate revenue, but the revenue growth or the receipt growth has been very slow over the past 3 years. And they, again, are on the brink of becoming profitable. They have had about 4 quarters in the past 3 years where they have been operating cash flow positive, including arguably the December quarter for financial year 23, which I'll be focusing on in today's video. Spectur was founded in 2009 and listed on the ASX in July 2017. And when you look at the managing director or the CEO, Gerard Dyson, he only has a 1.6% stake in the company. I would like that to be a little bit higher. And then if you take a look at the shareholders, it's just individual investors. There's no fund managers in this company. There's no fund managers probably talking about this company. And that is one thing this company needs to address. And that's one way you'll see the market cap and the valuation of this company get higher from here. So market cap of Spectur is only $6.6 million. That's at a share price of 3.4 cents. And on the back of their Appendix 4C for the December quarter, we have seen a heightened interest, a very slight heightened interest in this company, but still the valuation of this company is a fairly low 6.6 million. And the T code for Spectur is SP3. Earlier in the video, I did say they also arguably had another operating cash flow positive quarter for the December quarter in financial year 23. And I just wanted to really emphasize the arguably, because I would argue against this company having an operating cash flow positive quarter, even though if you do look at their cash flows from operating activities, the bottom number here says net cash used in operating activities positive 244,000. So you might say, well, it's positive. So they were operating cash flow positive for this quarter. Now, in saying that, it was a record quarter for the company in terms of receipts, 2.1 million, and receipts are growing at a very slow rate. We'll have a look at the receipts history later in the video, probably the next slide, in fact. But they also received $288,000 in government grants and tax incentives. In my opinion, and this is just my opinion, that does not belong in the cash flows from operating activities. That belongs in one of the other sections. So if you take away that $288,000 from government grants and tax incentives, and one of the reasons I don't agree it belongs in operating activities, it's not a continual thing a company receives every single quarter. And some of these government grants and tax incentives, a company only receives one quarter. Possibly that's true for Spectur as well. So it can heighten the operating cash flow for a company if you don't have a close look. And if you take that away from Spectur's operating cash flow, they would have been negative. So they would have been operating cash flow negative by $44,000. So we'll say they will break even or operating cash flow negative or break even, something like that. Anyway, based off on the back of that government grants and tax incentives, the company did increase their cash on hand from 2.8 million to 2.9 million. That is one thing that's always there at the back of our mind with Spectur, is that need for more capital raisings in the future if they don't become operating cash flow positive and free cash flow positive on a continuing basis. Now on to the receipts history for the company, and receipts are going up through time. If you put a line of best fit here, you'll get an upward sloping line from the first quarter, September quarter, back in 2017 to the most recent quarter. Receipts have grown from 400,000 to 2.1 million. There have been times here where receipts just look like they're going sideways. And that was like in 2019 into 2020, the receipts couldn't get above 1.5 million. Finally, they got above 1.5 million in the June quarter 2021, and then receipts went sideways again for about 5 or 6 quarters until the most recent quarter, where receipts had a record, or the company had a record receipts for a quarter with 2.1 million. So receipts are still going up through time, but very slowly. Spectur has had 4 operating cash flow positive quarters over the past 3.5 years, 2 in 2020, 1 in 2021, 0 in 2022, and now the first one in 2023, arguably. And what I want to see, because the majority of these quarters are when they're operating cash flow negative. So I want to see less of these blue columns, which is when they've had an operating cash flow negative quarter, and more of these green columns when they're operating cash flow positive. And until I see that, and I think until the market sees that, I think the share price won't be able to go up all that much from here unless we see a booming economy, unless we see a booming market. And that would be the one saving thing for Spectur if they can't be operating cash flow positive on a continual basis. And one of the reasons I mentioned the relationship of the share price of this company to a potential booming market, booming economy, is because at this point in time, Spectur's share price performance is quite highly correlated to the overall market, particularly with those unprofitable tech-like companies, because the share price of Spectur moved into a downtrend in January 2022, just like the rest of the market. In fact, the share price of this company fell from about 9 cents to 4 cents or 4.5 cents fairly quickly. So the share price halved in about 3.5 or 4 months, from January through to April. And the share price has kept on going down since then. A well-defined downtrend, when the share price gets into that red area, which is the area between 2 moving averages, I think the 25 and 75-day moving average, we see a little bit of selling, and the share price has a hard time remaining within that red area. And right now, the share price is at the top of that red area, because the share price has rallied a little bit on the back of this on the December quarter Appendix 4C. So possible signs of a shift in sentiment, or this could be a time to sell out of your position, because the share price is at the top of that sort of that red area. That's we call it that resistance area, and that means the share price right now is on the 75-day moving average. And what I would like to see right now is the share price to rally from here, because usually when the share price rallies into that red area, there's a bit of resistance. A little bit of selling comes in because shareholders who bought at higher prices in the past see the opportunity to sell out. You haven't quite seen that with Spectur over the past few weeks, and that's why the share price has just gradually climbed up over that time. So it does look like possibly sentiment in the company is shifting, and that sort of is linked to the shift in sentiment in the overall markets we've seen on the ASX and also on the American market. So if we do see the American and the Australian markets go up from here, I think Spectur share price could rise. But I would prefer Spectur share price to rally and rise on the back of good financial news. That's all I have for this look at Spectur's December quarter, Appendix 4C for financial year 23. They were arguably operating cash flow positive for this quarter, which was their 4th operating cash flow positive quarter through the past 3.5 years. And my hope, my desire for this company is they can be operating cash flow positive on a continuing basis each and every quarter, then they'll become profitable, and then the market will discover this company, because the market hasn't really discovered this company just yet. There are no fund managers having or have a position in this company, and I think that would be the driving force for the shift in valuation, a rise in the valuation of this company, is if fund managers start becoming interested in taking their position in Spectur. So if you do have any thoughts, any questions, any comments about Spectur, I'd love to hear it, so leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.